I got to be honest, though, I'm not sure what I'm more excited about is the fact that Qatar just gave our president a $400 million plane. The fact that we got Frankie Lagratera on our show today. Amazing, Frankie. In studio. I'd like a $400 million plane. Would you say, that's a good question. Would you take the plane or not take the plane that Qatar is gifting to the U.S.?
I mean, if somebody offered me a $400 million plane, I think it'd be crazy not to take it. Damn what everybody thinks.
I don't know. After everything I saw at the World Cup, I definitely wouldn't fly that $400 million plane.
Are you worried about there's spy equipment on that plane, or they're going to be able to track the U.S.? I don't know. Maybe
I think they're just going to take the plane. They're not going to do a full search of the plane. They're probably just going to take it.
Why don't they just put it on Amazon, get the cash?
Well, I'll tell you, somebody has to go on AI and figure this out. What's the inflation-adjusted cost of the Trojan horse in today's dollars versus getting a $1 billion plane from Qatar? So it's we have to research that, guys, for our next podcast.
What's the old saying? Those bearing gifts beware, something like that. I know I'm paraphrasing.
Yeah.
But let's face it here, right? I think the one thing we've been right about is markets are very good at forecasting the future, and the fact the market's been going up now for a couple of weeks was telling us that deals were going to get negotiated on Capitol Hill.
Volatility, historically, you always have volatility. You always have a correction. They come out of nowhere for whatever reason, sometimes known, unknown, but they're all emotional reactions. It just drives me crazy that any investor, any long-term investor would say, well, I got to get out and wait and see what happens. It's how many American businesses, how many businesses in the world, when things become volatile, put their business on the market? I'm selling my business. I'm getting out. I'm going to wait and see what happens with tariffs. I mean, it's so insane to me that people don't think that they have to be long-term investors. It's purely emotional.
No, you're right. We joke, but I did think about selling Payne Capital Management the other week when the market was down. I said, that was it. I'm out. I had enough. I can't do it anymore.
I'm interested. How many buyers were there?
None. That's why I'm still here.
Is that why you and Hank were meeting so much?
No, but I think it's a good point. I know, Frankie, talking to your clients, what has the emotional roller coaster been like the last couple of weeks? Have people been overly negative? Have they just been able to stay the course? What's been the overriding feeling about the markets in their portfolio?
Well, I always remind my clients that volatility is the fee that you pay to be in the market. Right? You have to pay it no matter who you're working with. You're doing it yourself. That's what we pay to be in the market. I always relate it to working out in your life, your lifestyle. If you weigh yourself every single day, you're going to go crazy. If you look at your portfolio every single day, you're going to go crazy.
That's a great point. I love that, by the way. It's a great that's amazing. Oh. Yeah.
Yeah, well, the good news is I had dinner last night with a client who...
And then you weighed yourself right after?
They still go by the monthly statement. It's last night I said, "Wow, we had a great day today." And he goes, "Yeah, but the month's not over yet." One of the statements could be priced. I told him, I said, every week, we have conference calls with our advisors, and they're like, "Yeah, clients check every day," except for my clients. They wait for the statement.
I like that old school. Just check for the statement every month and then complain to Bob.
Yes.
Invariably, the market goes down the day before they price the statement. Right?
So in the middle of the month, Bob, do you just chill?
I do. I have nothing to do. I'm like the Maytag repairman. I sit around, shoot rubber bands at the screen. I have nothing to do, no one to speak to. Again, and then statements come out, and all of a sudden my phone's ringing off the hook.
The first and the last week, Bob is busy.
You never hear from Bob at the beginning of the month. But it's it's so funny. I've had so many, and I've mentioned this before, so many calls with so many different clients where, we're talking for a half an hour, 45 minutes about how horrible things are. And then at the end of the call, I'm like, well, your portfolio is up for the year. And they're like, yeah, well, I know, but I just want you to know how horrible things are. So it really makes me think that, we're not actually financial advisors. We're just really great therapists.
No, that's exactly right. And think about this last month. You had a black belt in therapy to get through it. It's Bob and I were joking about this earlier. It's if you just went away at the beginning of April and came back, you'd be like, what's the big deal? My portfolio's barely moved over that time frame. And I think it just speaks to how emotional and irrational markets are in the short term, right? We've had all this tariff mania, and it just felt like apocalypse now, depending on, if you're watching the news or whatever media channel you're watching. And the reality of it is, we've been talking about this every week on this show. Kudos to us, maybe. The real data has actually been very, very good.
Yeah, but it's really scary when you have, a 3,000 point drop in the Dow in the day. That's visceral. You feel that, right? But one of the things that I've realized, and I realized this during the pandemic when we had those big days, is I take a lot of solace every time I swipe my credit card because they know like millions of other people are doing that every day. So as long as businesses are alive, the market's going to be okay.
But that's the same thing, Chris, right? If you weigh yourself after a big pasta dinner, you're going to have a panic. You're going to be like, oh my God, I gained 5 pounds, whatever it may be. No. And you can't just stop eating pasta. What type of life would that be?
And the amazing thing is, Americans love to eat and they love to spend money. And I think that is, what we've seen through and through here. If you look at like the Visa data, you look at the retail spending numbers, there has been no inkling that people are pulling back on spending right now. And I think the basic reason for that, and we do talk about this a lot, is we still have a relatively strong job market, right? And we're at a 50-year low in unemployment. And if you look at wages, they've significantly outpaced inflation over the last year. And if that trend continues, again, we saw inflation come down again this week, consumers probably not going to stop spending money. Even if they feel bad, we always say that they're going to continue to spend. That's what drives the economy. Until that changes, I don't think we're going into some sort of recession like everyone's talking about, or Goldman Sachs is talking about.
And I think you mentioned, I don't know if it was last week, you said that people actually spend more money when they're stressed.
Yeah, that dopamine is
that
real.
makes sense, right?
Yeah.
Well, you also have to apply a little common sense. I mean, we had
About time, Bob.
spectacular return in the S&P 500 2 years in a row, over 20%. So surprise, surprise, there was a correction in the S&P 500 so far in 2025, but it doesn't mean that other areas of the market, have to suffer as well. So, valuations do matter. Diversification isn't the worstification as a lot of people think because of, the Mag 7 dominated so much over the last 2 years. So it's the rhythm of the markets. And I think that the thing that worries me is we're getting so good at educating our clients that I don't have a counter indicator. That used to be a good contrary indicator where people panicking when the market was down 20%. We don't have that.
Let's be fair, though. A diversified portfolio only went down like 2-3% in this last downturn, right? One of the reasons why we're diversified. So that's not a real good litmus test, right? That's a little bit different than riding out those hot tech stocks or the AI boom over that short period of time. But my bigger fear here is, there still are a lot of animal spirits out there. I mean, if you look at Bitcoin, to me, that's over 100,000 again. The fact is there's so much money sitting on the sidelines. Think about all the money managers that were sitting in cash and all the investors that thought they were being quote unquote smart sitting in cash, and they're watching the market roaring back. What's going to happen here? I think the odds are you get a melt up, right? All that money starts funneling in. And then all of a sudden, everyone was so negative, all of a sudden they're going to get very, very bullish and very, very greedy very quickly. So just like markets change on a dime, so does human emotion, investors' emotions.
But, guys, it's not different anywhere else. I mean, I had a little reunion with a couple of the guys that I worked with years ago. And we were invariably start to talk about the business. And, they all said, yeah, oh, wow, international's doing so well this year. I can't tell you how many times my clients abused me over owning international. And now this week it's, why don't we have more of that? So it's just, it's human nature, right? Everybody wants, they want all the return without any of the downside, which is why, annuity salesmen do so well in our country.
I actually had a prospect one time many years ago question my patriotism because we had international in our portfolio.
Frankly, I question it too, Chris.
But, truth be told, I mean, it's, no one wants to invest when things are down, right? It's just, it's so difficult because, I'll wait till it goes down tomorrow, wait for some clarity. Your flight or fight instincts are kicking in. And that's the problem, I think, with our industry. Some of these accounts, so they come in, you see they have all the past winners, way too much. Of course, they don't have big percentage gains in the winners because they're buying them too late. It's, advisors sell what's easy to sell. They're easily swayed by their clients' emotions because they, oh my God, what happens if I lose that client? I can't get another one. So it's just, I think we all have to remember that, markets really never change, right? The cycles are the same, swings are the same, corrections are the same. The other thing that never changes is human nature and the emotions that drive those investment decisions. And that's why planning is so key and why you've got to just invest based on what you're doing, not what your neighbor's doing.
Hey, hope you're enjoying the most recent episode of Payne Points of Wealth. Everything you hear on this podcast, along with some due diligence of your own, can help you get ahead financially, literally at any stage of your journey. But if you want a more hands-on approach and you saved over $1 million, Bob, Chris, and I will put together for you our total financial master plan, and we'll do that with no obligation or cost. It's a full holistic review. We literally look at everything. We go as far as building you your own personalized financial portal. We'll give you a bird's eye view of your entire financial life, and we'll hone in on every financial issue you need to address today. Whether it's an income plan for retirement, how do you take Social Security? How do you draw from your portfolio? How do you factor in inflation? We'll build a dynamic income plan for you. We'll look at diversification. Has your portfolio been up and down with the markets, extremely volatile, or have you been sitting in cash? Paralysis by analysis. You can't figure out what to do. We'll put together a full investment game plan, tie it to your goals, show you how to grow your wealth, but most importantly, protect it over the rest of your life. And we'll look at fees and taxes. Wall Street loves to sell you high cost, tax inefficient products, whether it's an annuity, mutual fund, brokerage product. We'll do a deep dive of every investment you own. We'll show you how to reduce the cost, optimize your portfolio for taxes. It's not what you make, it's what you take. You'll get our full tax playbook. If you want this full holistic review and you saved over $1 million, simply go to www.paynecm.com/financial plan or click the link below to see if you qualify for a free financial review. All right, it's the tipping point. This is where we pinpoint the pain point having the biggest impact on your wealth right now. And for our financial autopsy today, Frank, you worked on a case recently where you had a widow. She recently, sadly, her husband had passed, and she came to you for some financial advice. So I thought we could break that down and talk about some of the issues that you addressed. And you got this specific woman, I don't like saying that, and you were able to get this person. Thank you. You were able to get this, I'm going to say this woman.
This human being.
Yeah.
This subject.
This buying unit.
It's a ticking tax time bomb, y'all.
We used to work with some insurance people, and they used to call people buying units. So when you're going to buy an insurance product or an annuity, I think that's a warning sign right there when you're calling people buying units. But you did help this lady. Did a great job, who was a widow. Why don't you break it down for us and just how you helped her get on her path to financial independence?
Yeah. So, subject 1, 2, 3.
Don't call people buying units, but go ahead. Yeah, I want to hear this.
So I met this wonderful, wonderful person. Their husband, unfortunately, had just passed away. They always had their spouse kind of being more hands-on with the assets. So
yes.
A lot of the money that she inherited, that she was living off of was money that she inherited, actually.
Right. And this is so common, right? So the one spouse tends to be involved with the finances, and then we have what Bob likes to call the uninterested spouse. So in this case, would you call her the uninterested spouse, the one that didn't deal with the finances? So all of a sudden she's like in the driver's seat and doesn't know how to drive, essentially?
Exactly. And
not that women are bad drivers either, by the way. So that was not...
No, actually, I would say in most situations, most of my female clients are the ones who I'm talking to about their finances.
Yes.
As for their full family. Unfortunately, just for this situation, she was the one that was... did everything else, took care of the children, took care of the household, took care of everything.
Yeah, 100%.
The social life, the, X, Y, and Z's.
Yeah.
So when it came to her now being in charge of everything, she just needed a little help. She needed a little hands-on structure. So we went through all of her accounts, and we noticed a few really big pain points.
That's a PAYNE pain point. Yeah. What was one of the biggest pain points that you saw?
So one of the biggest things that I saw was she inherited her husband's IRA as an inherited account.
Okay, so explain that. What does that mean? Because usually you inherit your spouse's IRA, you have it as a retirement account as well, and then you take it out of your life expectancy at a certain age, right? That's the simple.
That's the simple, right? Sometimes, and I think a majority of the times, what you want to do is inherit it as your own. So instead of it being inherited as, this is an inherited account and it will say that, you want to inherit it as, this is now Frankie Lagerteria's account. This is my IRA. It's on me.
So what happened? Broad strokes.
Broad strokes, what happened was she inherited as an inherited account, and so now something that could have been growing and not touching for 10, 20, 30 years is now having RMDs.
So now she's forced to take the money out and start that government partnership before she intended.
Yes.
And do you know how much roughly she has to take out every year and pay taxes on?
Roughly, so, $1 million account. Luckily, she's in Florida, so she doesn't have to worry about state taxes. But still, like you say, Chris, an IRA is a joint account with the IRS. That's my favorite Chrissyism.
Well, this is why IRA planning is so critical, right? Because the way that you inherit this money, the way you take that money, it can have huge implications from a tax perspective. And nobody did planning here. If you imagine that all of a sudden, hey, guess what? You're going to have to pay taxes on $1 million and you have 10 years to pay it. Like, that's a rude awakening, as Chris likes to call it. That's like a buzzkill.
Well, the thing that blows my mind, guys, is like first of all, whoever this person was working with, Frankie, didn't know what they were doing. Put this client, and if that's not financial malpractice, I don't know what is. But then, what I also noticed with all these custodians and banks, they're not even letting the client know what their RMD or the required minimum distribution is on an inherited IRA. The rules have become so complex and so changeable that they're not even giving them any direction. And then if you call the IRS, they don't even call you back. So, I mean, if you don't have a really good financial person, you're going to be in a big world of hurt with these IRAs going down the line.
It's like a scavenger hunt. I mean, you really have to go through the weeds to figure out what you owe and when you owe it.
In this situation, knowing that you had to take all this money out over a 10-year period, what was the strategy?
So now we're going to use that for her expenses, right? Whereas we're going to start tapping into that, using that for her expenses, using that for money that she needs to pay her bills and live off of, versus before maybe I would have looked at her brokerage accounts. But now I'm like, let's leave that for the kids. That's such a big, that's so important for her. That's a hot topic that she wants to make sure she lives a good inheritance. Well, hey, that has a step up in basis, so we'll leave that alone. This one has to be liquidated.
So because, she worked with you, you were able to turn, potentially disastrous situation into a good situation. But what I want to know is, when you informed her of this, what was her reaction? How did she feel about it? Was she upset? Was she concerned?
All of the above. She was blindsided. Like, she had no idea. She was like, no, I don't have to take RMDs until I turn 73. Like, I have, several years till then.
Now, all of a sudden, every year she doesn't take that money, that would have been a 10% tax penalty, which would have been a huge deal had she not met you.
Yeah, I mean, again, like, you're already paying taxes on this IRA, so this is already money that you're not getting, you're not keeping, that you've saved for, and now you have a penalty on top of it. It's like, there's plenty of other ways I can waste my money.
I'll tell you what, I'm really impressed, Frankie. You took a buying unit, turned her into a client, and saved her a whole buttload of money.
So, yeah, in a perfect world.
We should really buttload of money, Chris. I've heard that term in a while. But, I think that's the problem right now is the rules have changed so much, and I know you've been really on it. But really, it is more complex than ever when it comes to your actual retirement account planning. And you have to be so much more proactive than you used to be. But I think the plus side is if you are proactive, there's a lot of taxes you can actually save by just thinking about this ahead of time.
Absolutely.
And just to make things simpler, we now have a whole new tax bill being proposed. So, we'll finally find out what our income tax rates are or our state tax rates are. I'm sure they're going to do something to adjust the RMDs and the taxable nature of Roths and IRAs. So stay tuned, guys. They just keep coming at us from Washington. But I guess if we didn't have Washington, nobody would need us. So I can't be too upset.
All right, it's the hidden facts of finance. Random financial facts that may surprise you or even shock you. All right, Bob, first stat for you. About 20% of America's population will be over 65 in just 5 years. The economic ramifications of this so-called age wave potentially include tighter labor conditions, which we're already seeing, increased healthcare needs, and high costs for social programs. And you need 2.1 children per female just to keep the population growth even. And if you look at U.S. fertility rates, it hit the lowest level on record last year, falling to 1.62 births per woman.
Well, first of all, how do you have 1.6 children? Is that a child with a pet? I don't get that. But anyway, obviously I have the solution, as I do to many things. And I think that you and Chris should start emulating Elon Musk and get out here and populating the United States. Now, it turns out you don't have to be married. You don't have to live with a woman. But I think he's up to 11, 12 children so far.
Well, I may surprise in the second half of my life, Bob. So I'm keeping my eye on the prize. So don't count me out yet.
Ryan's always full of surprises.
And then the other problem is it just points to the huge issue we have with immigration, right? We have a We have full employment. We just created 177,000 new jobs. There's nobody out there to fill those jobs. Somebody's got to sit down with these people in D.C. and have them come to grips with the issue, because clearly we need a sound immigration policy, to fulfill this gap.
Don't get Chris fired up about the border. That's the last thing we want to do at the end of the show here. But yeah, bipartisan immigration policy. Good luck with that. But at some point, we'll probably need it. All right, Chris. James Anderson, the newly appointed CEO of Coherent, a technology company that makes equipment and products for networking and laser systems, was the only CEO out of 100 in a new study by a research firm, Equilar, to receive a 9-figure pay package. Yes, 9 figures, $101 million to be exact. Anderson's haul is a good bit more than the median annual pay for a CEO, which is $25 million, according to Equilar's newest study.
Wage ratios, or the pay ratio, is a big hot button right now. And they just said, you know what? Forget all that. Let's just pay our CEO $100 million. But, I've been thinking about this a lot, bloated executive compensation. I think, there could be some streamlining done around here at Payne Capital Management.
Why is he $25 million? And I'm basically a CEO of this company. I'm getting, grossly underpaid for my services.
You should talk to somebody about that.
HR?
We have to, the fact we have to pay you guys at all is really ruining my payday. So,
what are the good old days of capitalism, like Andrew Carnegie and the Pittsburgh steel mills?
I just working conditions, as an
intern. Working conditions weren't even a thing.
I think literally 25 cents an hour is the right pay for Chris. But that's just me.
I think Ryan Carnegie's got a nice tone to it. Bring the Pinkerton guards in here if people get out of line.
Back when men were men and sheep were scared, as Chris likes to say.
It was definitely a better time.
All right, and Frankie, I got a special stat for you. On average, the lifetime cost of owning a dog in the U.S. is estimated to be $28,000. This includes initial purchase, ongoing costs like food and vet care, and potential emergencies, while some estimates put the annual cost at around $2,524 a year. How much do you spend on Hank?
Minimum. Well, first off, I rescued Hank, so Hank was free, priceless is how I refer to it. But yeah, we just got his healthworm we just got his heartworm and his tick medication. That was easily, a couple thousand for the year.
Wow,
Food,
just for that.
Yeah. We go to the vet regularly because I am one of those crazy millennial parents who are terrified. But I don't care what the stats say. He's not 0.62. He's 3. So he counts as 3 children to me.
So how much do you think you spend on Hank a month? Real talk about Hank a month. You're sweating.
He has his own room, his own, his food.
How much?
At most 500.
Wow, that's well above the That's above the national average.
And that's, I think it's also because I had to go to the vet twice this month, so that feels really high. But I don't know, maybe at high 500, probably on average, probably closer to 100.
So I'd say it's good to be Hank. You're about 3 times the national average.
Well, last night, Dad and I had a really warming conversation. And Dad, I think you had mentioned how much money you would have saved if you hadn't had children.
Should have had dogs instead, Bob.
That's not exactly what I said, Chris. You always say, what would you do without me? And I list all the things, all the toys that I would have.
Bob has an accurate ledger to the penny.
Listen, Hank is the beneficiary on all of my accounts. He is the most important, the most important male in my life. So not enough do I spend on Hank.
Yeah, but Frankie, the good news is, Trump passed an executive order yesterday to put the cap on prices of pharmaceuticals. Does that apply to dogs as well?
I did see that. I don't think so. But I don't know. I'm one of those that the vet tells me what to do, I do it.
Well, speaking of expense for pets, I actually have a client, their daughter just got out of vet school with about $500,000 in debt just for vet school. So,
oh my goodness.
Just give you a sense about how much.
They get a bunch of Frankies as clients. They'll make that money back pretty quickly.
She'll be fine. I do hear that's a very hard job, and I'd think very highly of vets. Anyone who that's when I win the lotto, I'm going to go and volunteer at a pet shelter.
I think that's pretty smart, right? There's no Medicare for animals, right? So it's like cosmetic surgery, it's voluntary. People pay up. I think it's pretty smart to become a veterinarian.
Some people do like insurance now. Like you can do insurance for your pets, and it's a full thing.
I don't know. I think we could save this segment for the dog days of summer. What do you think, guys?
Well, I hope you enjoyed episode 204, Payne Points of Wealth. If you like our podcast, you love our podcast, please give us that 5-star rating on iTunes, Spotify. You can subscribe to our channel. Spread the good word. Your support gives us the support to continue to do this podcast. If you're watching this on YouTube right now, you can like this episode, subscribe to our channel. That's it for this week's Payne Points of Wealth. As always, stay loose and keep an open mind.
Thanks for listening to the Payne Points of Wealth. Hopefully you found the ideas discussed in this episode valuable and useful for your own financial journey. You can find out more about Bob, Ryan, and Chris's firm, Payne Capital Management, at bebullish.com or through the contact information found in the description of this episode in your podcast player or app. Join us next week for another episode of The Payne Points of Wealth, brought to you by Payne Capital Management. Information provided on today's show is provided for informational purposes only and does not constitute investment, tax, or legal advice. Investment is obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed.